Flippa offers you choice, and it tends to be that Flippa can drive competition for your asset.
Hey everyone, this is Nazar Akil from Max Pro.
Hi, I'm Linda.
And I'm Paul.
And we're 11 Pebbles.
Hi, this is Lopa Vandermersch from Rasa.
Oh, you're listening to...
And you're listening.
And you are listening to the E-Comm Show.
Welcome to the E-Comm Show, presented by BlueTuskr, the #1 place to hear the inside scoop from other e-commerce experts, where they share their secrets on how they scaled their business and are now living the dream. Now, here is your host, Andrew Math.
Hello, everyone, and welcome to another episode of the E-Comm Show. I'm your host, Andrew Mapp, and today I am joined by the amazing Blake Hutchison of Flippa, CEO of one of the largest marketplaces for buying and selling online businesses. Blake, how you doing? You ready for a good show?
Yeah, ready for a great show. Thank you, Andrew, and thank you for the nice introduction.
Anytime.
Too.
This is going to be, I'm super excited for this one. I love talking acquisition and game plan and ending game plan. Super fun. So let's pretend no one knows who you are. We'll just lie to them and tell us a little bit about your background, where you've been, how you got here, and all about Flippa.
Yeah, thanks. So I'm the CEO here at Flippa. I have been in my role for about 4 years, but Flippa is a lot older than that. And to some extent, people have been buying and selling businesses for hundreds of years, but Flippa invented this concept of digital real estate, the idea that business owners all over the world can trade online businesses and find a pathway to exit among a big buyer base universally. Personally, I've done lots of different things. I've been on leadership teams at fast-growing tech companies, including Xero, which is one of the world's largest cloud accounting software businesses. I've run online travel agencies. I was the chief revenue officer at Luxury Escapes, which is an online travel agency just for luxury travel. Was in fact the fastest growing company in Australia. You can hear the thick Australian accent. But I've also spent a lot of time in the US, and I'm currently with our Austin-based team who assist online business owners all over the world. So Flippa started 13 years ago. I've been here for 4 years, and we're having a great time of it. There's lots of wonderful business owners all over the world who use our platform, including e-commerce business owners.
Beautiful. So what is essentially like the ideal seller that is essentially, looking to obviously sell on Flippa? Obviously, I know it's a marketplace, right? So really what you're doing is you're providing the platform. You're not actually acquiring any of these businesses yourselves, correct?
That is absolutely correct. We are a platform. We are a marketplace. We're very much a middleman with an advisory service where required. And so what that means is that we're completely agnostic. So if a seller wants to use a third-party broker on our platform, or a third-party broker wants to bring a seller to our platform to access our large and kind of unparalleled buyer reach, they can do so. If a seller wants to work directly with Flippa and use one of our advisors on our staff, they can do so. We have a network of buyers all over the world, and that's kind of what makes our platform so attractive. And it kind of takes a lot of the heavy lifting out of the exit experience. So we connect to data sources so that we can interrogate your performance and show that to buyers. So we connect to Stripe. I'm going to talk about the e-commerce angle here, right? So we connect to Stripe, we connect to WooCommerce, we connect to Shopify, we connect to Google Analytics, where you need to showcase the traffic data. We connect to QuickBooks Online. So that means that it's easy for a seller to list, because we'll pull down the data and we'll rationalize it. It also means it's easy for a buyer to understand the performance of your business. And that's a really important piece. You asked me what makes the perfect seller, I guess. So I'll talk in averages. So the average e-commerce business that sells on Flippa is 4.5 years old. Now, that may scare some of your community because maybe they've got a 6-month-old e-com business or a 12-month-old e-com business and like, I want to sell it today. They could, but it's less likely to be as interesting as a mature business. And that's a really important thing for people to understand. They are most likely to be doing $250,000 in revenue and above. Mm-hmm. Okay. So that can be, again, a little bit scary to your community. That's not to say that if you have an asset that's doing $50,000 revenue or $100,000 revenue, you can't find a buyer on Flippa. In fact, there's far more buyers for smaller businesses. But talking about averages here. So the average seller is doing $250,000 and above in annual revenue. And the average seller is operating on has multiple channels, right? Direct to consumer plus FBA, direct to consumer plus Walmart. So they tend to be distributed in their revenue generation. Again, that's not to say that if you're a pure play Shopify retailer, you can't sell on Flippa. Of course you can. There's lots of buyers who want those assets, but just talking around averages.
So you'd mentioned about, making the whole acquisition strategy or whole concept significantly easier. Because I know from an e-commerce perspective, these sellers work incredibly hard to get their businesses to a certain spot. And then when they're ready to get, acquired, they're ready to sell. It is a nightmare, and it is like they've built all of this just to be stressed out for months on end. How long does it typically take once, you've found a prospecting buyer and then they actually are able to sell?
The bigger the deal, the longer it takes. But the average is 90 days, call it 3 months. That's the point at which time you have a letter of intent in your inbox. At that point in time, there's some due diligence that will likely play out. The best buyers are cash buyers. And that might upset some of your community who wanted to use an SBA loan or a 401k rollover. But if you talk about from the sell side, you talked about the stresses of creating a great business and going through the acquisition. The best buyers are cash buyers because they can move faster. And so 90 days to LOI, and then you typically have a 30 to 45 day close period. And that doesn't mean, though, that some bigger deals don't take a longer period of time, right? So we're doing deals up to kind of 40 million and as low as 5,000. So $5,000 assets, lots of buyers, lots of cash buyers, deals get done very fast. A $40 million e-commerce asset, you tend to be talking to fewer buyers and the due diligence process is a lot more burdensome.
So with e-commerce, though, like I know Flippa obviously is a marketplace for a lot of different online businesses. You have like SaaS companies, et cetera. In my opinion, those might be a little bit quicker simply because it's all digital assets that then get turned over, password gets changed, things like that. But from an e-commerce perspective, you have inventory changing over, you have different, tax laws, especially if you're Amazon and you're overseas and things like that. How does that whole process get handled within the platform?
Yeah, so so within the platform, we have a few things going on. So the first thing that happens is programmatic buyer matching. So we look through all of the mandates, we look through all the purchasing history, we look through all the buyer intent data, and programmatically, whether you're using an advisor or you're doing it yourself, programmatically the platform is bringing buyers to the table. You can choose to sell protected by a non-disclosure agreement. You can also choose to sell where your listing is only visible to verified funds buyers. So the first thing the platform does is act as a business development engine for you. The second thing that happens is buyers will start to inquire and you'll be involved in discussions. Now, either you or your advisor, M&A broker, M&A advisor, whatever it might be, there's a discovery process. Once the preferred buyer has been found, that preferred buyer can use our embedded letter of intent functionality. They can use our on-demand Flippa legal services, which include templates and/or bespoke projects as required. They can use the Flippa due diligence service. Now, then you said, how does that happen on platform with respect to transfer and inventory and things like that? There is a point where the platform's not able to handle certain things. And so we have integrated escrow. We have integrated trust accounts. So we can handle the funds movement, including things like stability payments, earnouts, those types of structures, the platform can handle. But what the platform can't handle is you've got $1 million worth of stock sitting in a warehouse. You're going to have to figure that out with the buyer. And the buyer is probably likely to draw that up in some kind of transfer of assets agreement, contract of sale. They may even insist on coming and doing an inventory check or analysis or stock take of that inventory. So the most common e-com business will be sold on the basis of a trailing 12-month revenue and net profit performance plus the cost of inventory. And inventory is often sold at cost. In some cases, buyers are savvy enough to try to understand the 80-20 rule. So show us the 20% that is generating 80% of the revenue, and we're going to acquire that inventory from you. But this is an asset sale, so you're going to be left over with the rest. Buyers are pretty savvy, right? So they're going to do whatever they can to optimize the asset and ensure performance of that asset. And so they might take your strengths but leave behind your weaknesses. Sometimes your weaknesses, though, can be their strengths. So they might take that on too, knowing that they have the capability to either move more product or optimize to sell. So hopefully that's helpful.
So I know the concept of acquiring other e-commerce sellers is something that I've always thought is a genius move that I think not enough e-commerce sellers actually move on, because the concept of expanding the product line, or even if you're not expanding the product line, maybe you have someone who, sales aren't great, but they have a huge list, and that list is a relative community to someone else. What do you typically see from an acquisition side? Are you seeing buyers going after someone with, a nice profit margin doing really well, or are you going after someone who's just got like a nice community that they're able to leverage themselves?
Yeah, a little bit of both. I mean, some buyers will buy on the basis of profitability, and they're looking to buy that for cash flow generating purposes. Some buyers are acquiring revenue, and some buyers are acquiring revenue plus potential, and the potential comes off the back of, perhaps to your point, they have a community. So perhaps it's an automotive parts e-com business, but they have a really passionate community talking about Ford parts. And they have a YouTube channel that's got a big audience where they talk about these parts. Maybe they have a big Facebook community that talks about these parts and how much they should cost. And there's a trading community going on there. In which case, someone who is in the automotive space will acquire the revenue. They may be less concerned about profitability because they realize they can optimize that using their own skills and or services they have. And they want the big audience that might come with that. So this is the interesting thing. Each buyer has a different motivation. But to your point, there are people buying to get incremental value out of their existing business.
Are you typically seeing D2C sellers, or are you seeing more drop shipping or wholesale or something along those lines?
Yeah, drop shipping's a little bit out of favor, but there are actually some really good quality drop shipping businesses. But it's a little bit out of favor. There's supply chain challenges. Cost has gone up. The likelihood of your customer receiving their product has some risk, and therefore refund rates are typically higher on drop shipping businesses. So, fan favorite, direct to consumer. Next fan favorite, FBA. Next fan favorite after that, multi-channel. So direct to consumer, Amazon, eBay, and Walmart. I'm obviously making that mix up, but you kind of get
from from an e-commerce perspective, you have a lot of really big aggregators out there, right? Like you have all these companies. One of the biggest ones that a lot of Amazon sellers are aware of is Thrasio, and they acquire a lot of those sellers. Mm-hmm. What would you say is the big differentiator on why a seller would want to go and basically use Flippa versus just going to an aggregator?
Yeah, it's a great question. It tends to be that Flippa offers you choice, and it tends to be that Flippa can drive competition for your asset. And so we have all of the aggregators shopping on our platform. We do deals with the aggregators all the time. In fact, we have a dedicated relationship manager for the aggregators and bigger buyers for that matter. And so what you get is flexibility and choice. And so what's interesting is, remember, the aggregator term is just a fancy new term for people who are acquiring businesses. There are lots of people that acquire FBA businesses and have for some time that aren't actually called aggregators. They're private equity. So, you want to avail yourself of choice and opportunity. The good thing about the aggregators is they tend to move fast because it's a hyper-competitive industry and they're all going up against each other for who can acquire the brands. Now, of course, that's slowed down a little bit for obvious reasons, but there's still, for the average FBA business owner, there is plentiful dry powder and lots of choice by way of your exit buyer. And so some of the aggregators got to the point where they were buying very, very big businesses only, right? But for the average e-commerce business owner, which is why Flippa kind of refers to itself as the investment bank for the 99%, the average e-commerce business owner is sub 10 mil, sub 1 mil. And so you want to remember that there's actually lots of high net worths. There's lots of other company buyers and institutional buyers that are not aggregators that are shopping, and give yourself choice.
So let's say D2C brand, I'm done. I don't want to do this anymore. What would you say are the appropriate steps to take before you even bother putting up your business on Flippa?
Yep. I would say sign up to cloud accounting software, QuickBooks Online, Xero, FreshBooks, Sage. I don't really care which one. Hire a bookkeeper or an accountant and tell them to get your trailing 12 months, preferably 24 or 36 months worth of data in those platforms so that it can be easily rationalized and understood by a prospective buyer. I would say that if you have inventory issues and your revenue is declining, fix those inventory issues, fix your revenue base before you try to sell. Because there's lots of choice for buyers. They don't buy assets that are distressed. Typically, there are some aggregators, by the way, who only buy distressed assets.
Well, it's smart. It's like a discount.
But for the average, totally. For the average buyer, turnarounds are hard, and you declining 10% month on month because you've got an inventory or supplier issue needs to be resolved. So fix that up. The second thing is rationalize what you're willing to take depending on your situation. We've seen buyers who have $1 million offers, signed letters of intent, signed contracts of sale. 48 hours later, they ring up and say, "No, I want another $50,000," because they just do. They're sitting on the couch and they're like, "Oh wow, I actually got a deal done." maybe I can extrapolate more out of this. That is a surefire way to ruin and kill a deal. Buyers are not patient. There's lots of deals for them to do. So rationalize what you're willing to take. And anything above that, just get the deal done.
What would you say is one of the common mistakes you see from e-commerce sellers when they're looking to, finally go through the acquisition process?
Yeah, it's a great question. Probably, without sounding like a broken record, probably just knowing their financials and having their financials in order.
Yeah.
Yeah, I'd probably say that's the biggest mistake we see.
Where do you see, because obviously you guys have all the data on companies getting acquired, companies that are buying people like you, obviously that's your whole business. Where do you kind of see things going as time goes on? Because obviously right now we're in a very volatile market. Things are changing. It's possible that buying is slowing. It's possible that people who want to sell has increased. So how do you see it, once the smoke clears in the next 6 to 12 months?
So for sellers who are operating sort of sub 10 mil, the macroeconomic pressure may have impacted your actual business, i.e. supply chain, cost of goods, etc., but it hasn't impacted buyer or investor appetite. And the reason being is that remember that these businesses were undervalued and underappreciated to begin with. They weren't overvalued. They're not publicly traded stocks. They're not venture capital backed businesses. They're genuine, with all due respect, and I personally love small businesses, they're genuinely small businesses. They're small business owners. They're the lifeblood of the economy. They're undervalued. Small businesses are always undervalued. So it's not like the buyers who are interested in this space have suddenly said, oh, wow, I need to find the valuation floor before I start shopping again, because we've always operated on the floor. So that's kind of point one. Point two is kind of e-commerce is not dead. In fact, it's only the beginning. You would know better than I would, but I think it's something like total retail is 14%, right? So e-commerce as a percentage of total retail, please correct me if I'm wrong here, but I think it's something like 14%. Yet people know it's a more convenient way to buy. And so e-commerce will continue to be a critical part of consumer spending, a critical part of people's lifestyle habits. And so accordingly, we expect better and more e-commerce business owners over time. If you look at Shopify, while their enterprise value is down substantially, the number of new businesses starting on Shopify each quarter is actually up year on year. So I guess philosophically, we actually think that 2022 and beyond will be a richer ecosystem for the buying and selling of these assets. Clearly, some people who had businesses which were built for the benefit of a pandemic, they may struggle, because if you're selling masks and you did really well, that's probably not such a good business anymore. I'm kind of walking around the edges here, but I tend to think that there's enough buyer demand that for someone with a good quality business, they can get the exit if they want to. But you start to see trends. So coming out of, in the pandemic, no one wanted to buy travel-based assets for obvious reasons. Coming now, travel's hot again. We see 600,000 keyword searches on Flippa every month, and travel's near the top again. So health and wellness is typically at the top. Cooking-based and home and garden. They're very. People know that even in a recession, people are going to still buy things for their home. They need to upgrade stuff. So it tends to be certain categories are a little more.
I would imagine the pet industry, because I know that's one of the top recession-proof industries tends to be pets, because even if you're stuck at home and you can't afford anything, you obviously still want to spoil as much as you can your animals. Is that another one that you tend to see up in the top?
Yeah, that's right. I mean, the pets industry is a super lucrative industry, and there's plenty of people who are nichifying it and finding a particular area of interest. We've seen dog beds specific e-com businesses sell really well on Flippa because people always have pets and they always need to upgrade their dog beds. In fact, my dog's eaten about 25 dog beds, so I'm always upgrading.
You should buy one. Buy one of the businesses. You won't run out. What about, so you mentioned a sub 10 million, sub that 8-figure mark. Real quick before we wrap stuff up here, what's your stance on multiples? Because that's always, what the seller wants to know is, what am I going to get for this? I've heard notoriously sub 10 million, you're looking at about a 2 to 4x. Maybe if you're lucky, if you're pushing it, you might push a 6, but then if you're above 10, you're closer to a 6 or 8. I could be total BS. I don't really know. What's your thought on how to value an e-commerce business?
Yeah, so a super well optimized business is typically getting 2 to 4. An under optimized business gets higher, right? Because the buyers can actually see substantial opportunity. It's being acquired on, and just to be clear, you and I are talking about profit multiple here, right? Yeah, cool. So some people like revenue multiple, some people profit multiple, sometimes people do monthly, we do annually, right? So let me just pull up a couple of examples here. So, okay, so this week, $2.5 million asset, just as an example, that sold for 3.62. That's jewelry. So that was
when you
jewelry.
say $2.5 million asset, you're including annual. Well, I guess you're also including inventory at that point as well, correct?
No, we're not including inventory. So that's without inventory. So $2.5 million was sold 3.62 times profit.
Okay.
Last week, another one here. That's a bigger one. So 6.3 times. Bit smaller asset, $750,000, sold at 6.3 times. I'm just looking through last week's data. Another one here, admittedly, it's only 6 figures again, 2.82. So, I guess, we can kind of say 2 to 5 times, but each asset's a little bit different.
Interesting.
And we had a case last week. It was a golfing asset, E-Comm, and
it's huge right now.
The seller had lots of buyer attention. Could have got a deal done super quickly, and I applaud this. I admire this patience, but she refused to sell to anyone but an avid golfer. And so, accordingly, maybe she jeopardized a higher value buyer given her desire to find a particular type of buyer. And so multiples are a really, really interesting way to talk about a business and its quality because there are so many variables.
I mean, that makes sense. We hear a lot of, these sellers that they want to sell their business, but it's their baby and they want to know that their baby's still going to get taken care of, even though they have to let it fly away. So that makes sense. That's admirable. I admire that. It works. But
this is an interesting one, actually. Sorry to interrupt, but 8.5 mil, 6.43 times profit multiple on 8.5.
And you're saying 8.5 mil profit?
No, that was an $8.5 million price, like a sale price. That's what the asset was acquired for.
I'm with you.
That was 6.44 times profit.
Got it. Interesting. So, yeah, it's in that 2 to 6 area. Huh. Cool.
Yeah.
Blake, really appreciate it. This was fun. That was cool that we got like actual data on it. That was great. I don't want to take up too much more of your time. I would love for you to, do the usual, let everyone know where they can find out more about you, more about Flippa, and we'll wrap this thing up.
Yeah, thank you. It's been fun. Check out flippa.com. Best way if you're a buyer to get into it is just to start to browse around other e-commerce assets and get a feel for them and how much they've been bought and sold for. If you're a seller, you can get a valuation at any time. Just go to flippa.com and hit the valuation tool there. It's based on comp data. We've got 5 different machine learning models assessing categories and types, i.e. Shopify, i.e. pets and garden. So you can get a valuation if you need to. If you want to get me personally, get me at blake@flippa.com. Always happy to help people out. It's a new industry. It's quite foreign to many, many people. So reach out to me directly. I'm obviously on LinkedIn. Just get me at Blake Hutchison. I'm sure if you search that, I'll pop up there. Again, Andrew,
thank you. Blake, appreciate it. Obviously, everyone who tuned in, thank you for tuning in. And make sure you rate, review, subscribe, all that fun stuff on whichever podcast platform you want over at YouTube, or just head over to ecommshow.com and pick your poison. But as usual, appreciate you all joining us, and we'll see you all next time. Have a good one.
Thank you for tuning in to the E-Comm Show. Head over to ecommshow.com to subscribe on your favorite podcast platform or on the BlueTuskr YouTube channel. The E-Comm Show is brought to you by BlueTuskr, a full-service digital marketing company specifically for e-commerce sellers looking to accelerate their growth. Go to BlueTuskr.com now for more information. Make sure to tune in next week for another amazing episode of the E-Comm Show.